Welcome back to the deep dive. Today, we are unpacking a transformation that is honestly one of the most jarring I've ever seen in the corporate world.
Mm-hmm.
We are looking at a company that spent, something like 2 decades as this idealistic, let's save the planet, green energy research lab.
Right. They were chasing the dream.
They were essentially trying to solve the physics of turning ocean waves into electricity. And we are watching them in real time fundamentally shapeshift into something completely different.
It really is a case study in survival and adaptation. We are talking about Ocean Power Technologies, ticker symbol OPT.
OPT.
And if you were following this company 5, maybe 10 years ago, you saw a speculative renewable energy play. That's all it was.
Right.
But if you look at them today, and for context, today is Monday, January 26, 2026. You're looking at a company that has stripped away the Save the Whales marketing.
Completely.
And is explicitly, loudly talking about the Department of War.
That phrase stuck out to me in the notes immediately. Department of War. You just don't hear that in an investor deck, It's so blunt.
It is. It's a deliberate signal. And the timing here, like you said, is absolutely critical. We're recording this on January 26th, 2026. OPT has just announced some massive validation.
Huge wins.
Wins with the U.S. Coast Guard and the Navy, which we are definitely going to tear into. But, and there's always a but with these kinds of stories.
Always.
They just posted a revenue drop in their most recent quarter that is, well, it's terrifying. It's a cliff.
A total collapse. This is classic binary moment, isn't it? High anxiety, high potential.
Exactly. And that is really the mission of this deep dive today. We need to figure out, is OPT evolving into the future nervous system of maritime defense? Is it becoming the eyes and ears of the Navy?
Or
Is this what we call a liquidity trap, where the technology is brilliant, the mission is critical, but the investors get crushed because the company runs out of cash before the big contracts actually pay out?
right. Is this the next Lockheed Martin in its infancy, or is it a zero? It feels like there's very little middle ground here.
There really isn't.
So to understand that, we have to start with the problem they are solving. Because you can't understand the company without understanding the geography.
Right.
We always hear that stat, right? The ocean is 70% of the planet.
It's a cliche, but it's a cliche for a reason. And from a national security perspective, that 70% is a nightmare. It's a void.
A massive blind spot.
It creates what one of their advisory board members, Rear Admiral Joseph DeGardo, calls the unsolvable math problem.
The unsolvable math problem. I love that phrasing. It's so clean. Let's break that down for everyone. Why is it unsolvable?
Well, it comes down to physics and finance. It's that simple. The U.S. military, even with its massive budget, simply cannot put a sailor or a ship on every square mile of ocean.
It's just too big.
It's fiscally impossible and logistically impossible. I mean, think about a destroyer, a modern Arleigh Burke-class destroyer. You're talking about a $2 billion asset.
And the crew, the fuel, the maintenance.
Exactly. It costs hundreds of thousands of dollars a day just to keep it running. And these things are designed for interdiction, stopping bad guys, shooting things, boarding vessels. They were kinetic assets.
So using a $2 billion destroyer to just sit in the middle of the Pacific and stare at the horizon for 6 months is...
It's wildly inefficient.
It's worse than inefficient, right? It's a misuse of the asset.
Completely. It's like using a Ferrari to deliver a pizza. I mean, it'll get the pizza there, sure, but you're putting miles on a high-performance machine for a mundane task.
And right now, that's often what we do. We use these incredibly valuable manned ships to watch for drug smugglers or illegal fishing fleets.
It's a massive waste of resources.
Yeah.
And it wears down the ships and the crews.
And because we can't be everywhere, there are huge gaps, right? I mean, just enormous blind spots.
Massive. The ocean is dark. And the bad actors, drug cartels, illegal fishing fleets, adversarial submarines, they know this. They're not stupid. They exploit the gaps.
So that's the setup, this unsolvable problem, and then OPT enters the chat and says,
we have a solution to the math problem. We have robots that never sleep, never get seasick, and crucially, they don't need a paycheck.
And this brings us to segment 1, the strategic inflection point. This isn't just a new product line. This feels like a total identity transplant.
It is a complete pivot.
They aren't selling green energy anymore. They are selling maritime domain awareness.
MDA. That is the acronym you're going to hear a lot. And the rebranding is stark. You listen to their investor calls now. Management has stopped leading with, we help the environment.
That's maybe bullet point 4 now, if it's there at all.
Right. They're accelerating discussions with defense officials. The vibe shift is palpable. We've gone from saving the coral reefs to hunting submarines.
It really feels like a survival strategy, the green energy market for wave power.
Yeah.
It never really materialized the way people thought it would back in the 2010s, did it?
It didn't. Physics is hard. And the economics of wave power against, say, solar or wind,
Yeah.
it just didn't pencil out. It was too expensive. The maintenance was a nightmare.
Right, saltwater is brutal on equipment.
Brutal. But the defense market for autonomous surveillance,
Yeah.
that is exploding. Geopolitical tensions in the South China Sea, the Arctic, the Persian Gulf, I mean, they're at all-time highs.
So OPT is positioning itself as the, what was the phrase? The digital limbic system of the ocean.
Yes. Okay, let's unpack that analogy because I saw it in the research and I think it's fascinating.
It's great branding.
It's brilliant branding, but it's also technically accurate. Think about your own body. You don't consciously control your heartbeat or your digestion or your body temperature.
Right, it's all background processing.
Their autonomic nervous system handles that in the background. You only pay attention when something is wrong. A sharp pain, a loud noise, a sudden drop in temperature. That triggers a cortisol dump. It wakes you up.
So you ignore the background noise until there's an actual threat.
Exactly. OPT wants to be that autonomic system for the Navy. Their technology sits in the ocean, and it monitors the pattern of life.
Pattern of life.
The normal waves, the shipping lanes, the marine life, the acoustic noise of the ocean. It filters all that normalcy out. It doesn't bother the human operators with hours and hours of footage of just empty waves.
So it's not sending a constant video stream back to some pool sailor in a dark room.
No, God, no.
Yeah.
It only triggers an alert, a cortisol dump for the commander when there is an anomaly.
Give me an example of an anomaly. What kind of thing trips the wire?
A submarine acoustic signature where it shouldn't be. A fast boat moving toward the border at 3 in the morning with its lights off and no transponder. A sudden change in water temperature that indicates a large vessel passing by.
Something that breaks the pattern.
It breaks the pattern.
Yeah.
And that allows the human operators to ignore the vastness of the ocean until something actually happens.
Which solves the math problem. You don't need a ship everywhere. You just need a sensor everywhere. And then you send the ship, the Ferrari, when the sensor screams.
Precisely. It preserves the manned assets for the fight. It lets them do what they were built to do.
Okay, strategy is cheap. Execution is hard. Let's open up the hood. Segment 2, the technology stack. Because, like we said, they aren't just selling a single gadget. They are selling what they call a system of systems.
Correct. And that's a key differentiator. If you just sell a buoy, you're a commodity. Anyone can make a buoy. But if you sell an integrated network, you're a partner.
So they have 3 components in this ecosystem: the eyes, the legs, and the brain.
That's the breakdown.
I like that. Let's start with the eyes. This is the Power Buoy platform.
The Powerbuoy is the flagship. It's what they're known for. Visually, you should picture a large yellow structure bobbing in the water, looking a bit like a channel marker, but much, much more substantial.
And it's not just a floating marker.
No. It functions as a floating cell tower and a sensor hub. But the magic is how it stays alive, how it powers itself. The PB3 model, their main one, it harvests wave energy.
From the actual up and down motion of the swell.
That's right. As the waves pass, the buoy moves up and down, driving an internal generator which charges a battery bank inside the hull.
So it's a floating battery that charges itself, which is a brilliant concept. But I have to ask, what happens if the ocean is flat? Or if you're in the Persian Gulf, where the waves are small?
And that's the Achilles heel of pure wave power. Right. And that's why they developed the hybrid power buoy. They learned the hard way that wave energy isn't universal.
So the hybrid is their answer to that problem.
It is. It uses a large array of solar panels on the deck and, critically, a Stirling engine inside as a backup.
A Stirling engine. I had to look this up. That is incredibly old school technology. That's 19th century thermodynamics. Why are they putting a steampunk engine in a modern robot?
It does sound retro, doesn't it? But it's actually perfect for this application. Unlike a diesel generator, which involves internal combustion, explosions inside a cylinder, lots of noise, lots of vibration.
And a big heat signature, which I imagine the military doesn't love.
Exactly. A Stirling engine is external combustion. It's purely heat-based. You heat one end, cool the other, and the changing gas pressure drives a piston. It's incredibly efficient, and more importantly for the military, it is nearly silent.
And it runs on what?
It runs on liquid fuel, like propane. But it only kicks in when solar and waves aren't generating enough power. It's the backup that guarantees persistent power.
That's the key word I keep seeing everywhere in their materials. Persistent.
Because that's what the customer is buying. persistence. These things can stay on station indefinitely. You don't need a ship to come by and refuel them every week. They are the permanent eyes on the water.
And they're iterating on this, right? I saw a note about a next-gen buoy they just launched.
Yeah, off the coast of New Jersey. It combines wind, solar, and wave power all in one platform, plus, and this is a big deal, AT&T 5G connectivity.
So now you essentially have a commercial 5G cell tower in the middle of the ocean.
Exactly, which is an absolute game changer for moving large amounts of data quickly.
Okay, so those are the eyes. Let's talk about the legs. The WAM-V, which stands for Wave Adaptive Modular Vessel.
This is visually the coolest thing they make. I really recommend you look up a picture of this. It looks like a spider boat.
It does. It's like something out of science fiction.
It's a catamaran, so it has 2 pontoons. But the deck doesn't sit rigidly on top like a normal boat. The deck is suspended on this articulating suspension system with springs and shocks.
It looks like it has knees.
It essentially does. The pontoons move with the waves, they sort of ski over them. But the payload deck, where the expensive cameras and sensors and computers live, that stays relatively flat.
Why go to all that trouble? Why not just build a regular rigid boat?
Because of the data. It all comes back to the data. If you put a high-definition long-range camera on a normal 20-foot boat in 4-foot seas, the footage is going to be unwatchable.
Just a shaky mess.
A total mess. It's shaking, it's bouncing, the horizon is going crazy. AI can't process that image efficiently. A human can't stare at that for hours without getting sick. The WAM-V suspension creates a stable platform in rough seas.
So it allows the robot to keep working when other drones would have to come home or would just flip over?
Right. It expands the operational envelope significantly.
And there is a critical piece of technology here that connects the eyes and the legs. I saw a patent mentioned in the notes from, I think, June of 2025.
This is the force multiplier.
Yeah.
This is what makes the system of systems concept a reality. The patent covers a system where the WAM-V autonomously docks with the power buoy to recharge its batteries.
That is huge. So the boat literally drives itself up to the buoy, plugs itself in, tops off its battery, and then just goes back on patrol.
Yes. It creates a persistent loop. Think about it. Currently, most drone boats, most unmanned surface vessels, they have a range limit. They have to go back to shore or back to a mothership to refuel.
Which means there's a gap in surveillance every time it has to do that.
There's a gap. But if you can charge at the buoy, which is already on station, you never have to leave the area of operation. The buoy becomes a gas station.
A floating gas station. That is the definition of a force multiplier. Okay, so we have eyes and legs. What about the brain?
That is the Mero suite. This is the AI software layer that ties it all together. And the key concept here, the buzzword you need to know, is edge computing.
We hear that buzzword a lot in the tech world. Explain it in this specific maritime context. Why does it matter that the computing happens at the edge?
It matters because bandwidth at sea is incredibly expensive and rare. Sending data via an Iridium or even a Starlink satellite connection costs a lot of money, and the pipes are relatively small.
So you can't just stream 4K video to 47.
You cannot stream 4K video of empty water back to headquarters all day. It would cost a fortune, and it would clog the military's entire network. Mero solves this by processing the video and other sensor data on the buoy itself, at the edge.
So the buoy is its own analyst. It watches the video, decides what matters, and throws the rest away.
That's a perfect way to put it. It filters out the waves, the seagulls, the clouds, the background noise. It only sends a small data packet, a text message, essentially, when it sees an anomaly.
A periscope, or a fast attack craft.
Right. It sends the coordinates, a classification of the target, and maybe a 10-second snippet of video for a human to verify. It turns a big data problem into a smart data solution.
And Mero's integrates all the sensors, subsea, surface.
Everything. It fuses data from subsea acoustic sensors, surface radar, and aerial drones into one single coherent picture for the operator.
So that's the tech stack. It sounds impressive, genuinely impressive. But impressive tech goes bankrupt every single day.
Every day.
We need to talk about how they are selling this. Segment 3, the business model transformation.
This is a transition that Wall Street theoretically loves, but absolutely hates waiting for. They're moving from CapEx to OPEX, from selling hardware to selling as a service.
Okay, walk us through the economics of that for the listener who might not be in finance. What does CapEx versus OPEX mean here?
Sure. In the old model, the CapEx model, OPT tries to sell a power buoy to the Navy for, let's say, $1 million. That's a capital expenditure for the government.
A big one-time purchase.
Exactly. And government procurement for big hardware is a nightmare. It takes years. There are committees, trials, bidding wars, and once the Navy buys that one buoy, they own it. OPT gets paid once, and that's it. It leads to very lumpy revenue.
Feast or famine, one big sale, one quarter, nothing the next.
Exactly. The new model is data as a service, or DaaS, or power as a service, passive. In this model, OPT keeps the buoy. They own it, they maintain it, they deploy it where the Navy wants it, and they just charge the Navy a monthly subscription for the video feed.
It's Netflix for ocean surveillance.
It's exactly like a subscription. Or think about it like leasing a cell tower. The Navy doesn't own the tower, they just pay for the signal. Or you have robotics as a service, ROS, where they lease out the WAM-V with operators for a specific 2-week mission.
Why does the Pentagon agree to this? Usually, the military likes to own their toys. They want to paint them gray and put them on the asset list.
Because maintenance is a headache, a huge headache. Defense customers do not want to scrape barnacles. They don't want to manage a fleet of robots and fix broken solar panels. As one expert put it, they are buying a decision cycle, not a piece of metal.
They want the result, not the tool.
They want the data. And this model also allows the Navy to use their operations and maintenance budget, their O&M funds, which are often deeper and much easier to access than the big procurement budget.
And for OPT, the benefit is obvious. This creates recurring revenue, sticky income.
It increases what they call customer lifetime value. Once you are integrated into their intelligence feed, once they rely on your data every day, it is very hard to turn you off. You become part of their workflow. It's a much more valuable long-term relationship.
Now, before we move to the specific contracts, we have to mention the boring sibling in the family, the 3Dent division.
Yes, the Houston office. This is the legacy energy side of the business. They do high-end engineering consulting for offshore wind and oil and gas, things like structural analysis, simulation, mooring design.
So it's not sexy like robot boats hunting submarines.
No, it's the pocket protector side of the business.
So why keep it? If they're pivoting so hard into defense, why distract themselves with oil rigs?
2 reasons. One is cash flow. It keeps the lights on. It's a profitable, stable business that generates steady cash while the defense side tries to scale up. It's a stabilizer for the whole company.
And the second reason?
Expertise. The engineers at 3Dent are world-class experts in putting complex machinery in harsh offshore environments and making sure it doesn't fall over. If you're building a wind farm in Taiwan or an oil rig in the UAE, you need serious engineering to ensure it doesn't fall over in a typhoon. That expertise is directly applicable to deploying power buoys for the Navy.
So there's a synergy there. It's not a total distraction.
There's a definite synergy.
Okay, so we have the strategy, the tech, and the business model. But who is actually validating this? A small company can claim they have the best solution in the world, but without a major validator, it's just noise. This brings us to segment 4, the defense ecosystem.
And the biggest validator here, the name that should make any investor sit up straight, is Anduril Industries.
Anduril is the rock star of the defense world right now. Palmer Luckey's company. They are the definition of a disruptor, really going after the Lockheeds and the Raytheons.
They're the first successful new defense prime contractor in decades, and OPT has a formal partnership with them. Here's the synergy. Anduril has an operating system called Lattice. It is an incredible AI software layer that fuses sensor data to track threats. It's the brain.
Software can't float.
Software can't float. It needs a server. And in the middle of the ocean, that server needs power and a data link.
So Lattice needs a physical host.
Exactly. OPT provides the power buoy. It is the ruggedized, persistent physical infrastructure for Anduril's brain. Currently, they are supporting a Department of Homeland Security mission off the coast of California using this exact setup. OPT provides the buoy, Anduril provides the software.
That feels like a massive endorsement. If Anduril trusts OPT's hardware to host their crown jewel software, that tells the Pentagon that this stuff works. It's not a science project.
It proves it's ruggedized, it's ready for the real world. And speaking of the Pentagon, let's talk about the Navy and Project Overmatch.
Project Overmatch. It sounds like a spy movie title, but it's real doctrine.
It's very real, and it's a top priority for the Navy. It is their contribution to this bigger Pentagon concept called JEDC2, Joint All-Domain Command and Control.
The idea of connecting everything.
The goal is to connect every asset-manned ships, unmanned drones, submarines, F-35, satellites into one unified battle network so everyone sees the same picture at the same time.
And OPT is involved in this.
They are a subcontractor on Project Overmatch via a company called EpiSci. They completed a second set of exercises in late 2024, at what the Navy calls the Mission Autonomy Proving Grounds.
What does that actually prove for a small company like OPT? What does that milestone mean?
It proves interoperability. It's a huge deal. You can't just plug a civilian Wi-Fi router into the Navy's classified kill chain. You need military-grade encryption, security protocols, and extreme reliability. Being invited back to Overmatch is a badge of honor. It means your technology is cleared to play with the big boys.
And then just this month, January 2026, we got the news about the Coast Guard contract.
The $5 million award. This aligns with the Coast Guard's Raptor initiative, which stands for Rapid Response and Prototyping. The idea is to get new tech into the field quickly.
Now, $5 million isn't a huge amount in the grand scheme of defense spending.
No, it's not going to change their financials overnight. But for a company OPT size, it's significant. More importantly, it's for an operational mission off San Diego.
This isn't R&D.
This is not a test. This is border enforcement, drug interdiction, protecting the shoreline from real-world threats. It's putting their system of systems to work right now.
And finally, there's the Red Cat partnership. This is the aerial drone angle.
Right. This aligns with the Pentagon's big replicator initiative.
The plan to mass produce thousands of cheap autonomous systems to counter China's numbers.
Exactly. OPT is working with Red Cat to integrate their Teal 2 drones with the WAM-V boats.
So the boat becomes an aircraft carrier.
A microcarrier, yeah. The boat sails out to a point of interest, launches the aerial drone to see over the horizon or get a closer look at a suspicious ship, and then the drone lands back on the boat to recharge. It extends the sensor range dramatically.
So the technology works, the partners are there, the contracts are starting to flow. It sounds like a slam dunk, but we have to look at the bank account. Segment 5, the financial health.
And this is where the story gets scary. This is where the risk becomes very, very real. We are looking at a classic revenue cliff. Let's break it down into the good, the bad, and the ugly.
Okay, start with the good. Give us the bull case numbers. What's the optimistic view here?
The good is the backlog. Funded contracts, these are orders that are signed and validated, are at $15 million. That is up nearly 300% year over year.
300%. That is explosive growth in demand.
It shows the pivot is working. And the pipeline.
The potential deals?
Qualified opportunities deals they are actively negotiating and expect to close are sitting at $137.5 million. The interest in this defense pivot is real. The military wants this stuff.
Okay, that sounds fantastic. So what is the bad?
The bad is the current recognized revenue, the money that actually hit the books. In the second quarter of their fiscal year 2026, revenue collapsed to just $0.4 million, $400,000.
$400,000?
That is down from $2.4 million the previous year.
Wait, hold on. How do you have a $15 million backlog but only recognize $400,000 in revenue? That disconnect is massive.
It's the brutal reality of government contracting. The culprit is budgetary pauses, government funding delays, continuing resolutions in Congress. You know the story.
The government shutdown dance.
Exactly. When the government operates on a CR, no new contracts can start. Existing payments get delayed. The entire machinery of Washington, D.C. grinds to a halt, and a small company like OPT gets caught in the gears.
So they're just waiting for the check to clear.
They are. But while they wait, we get to the ugly, the liquidity gap.
Okay. How much cash do they have in the bank right now?
As of the last public filing, $11.7 million.
11.7. And how much are they spending? What's the burn rate?
Their operating cash burn is about $13.1 million every 6 months.
I don't need a calculator for that. They have less than 6 months of cash left at that burn rate.
Correct. They are running on fumes. And to make it even tighter, they recently added $10.25 million in convertible notes. That is debt that counts as a current liability. The clock is ticking, loudly.
So they need money, and they need it yesterday. What are their options?
This leads directly to dilution risk for any shareholder. They have a $40 million at-the-market facility, an ATM.
What does that mean?
It's a mechanism that allows them to sell new shares of stock directly into the market on a daily basis to raise cash. It's like a corporate credit card, but instead of debt, you're printing new equity.
But that dilutes every existing shareholder. It's like cutting a pizza into smaller and smaller slices. Your piece gets less valuable every time they do it.
It is, and it's a clear signal of their intent. In their 2025 proxy statement, they asked shareholders to vote to increase the number of authorized shares from 300 million to 400 million.
So they're loading the cannon, they're getting ready to print a lot of stock to survive.
That's the only logical conclusion.
So if you are an investor, you are staring at what you called a binary inflection.
Exactly. It's a make-or-break moment. They must raise money to survive long enough to start recognizing the revenue from that $15 million backlog. If they can bridge that gap, if they can survive the next 12 months without wiping out the equity holders, then the recurring revenue model kicks in, the big contracts ramp up, and this stock could be a multi-bagger.
But if the government delays again?
Or if the stock price crashes while they were trying to raise money from the ATM, it becomes a death spiral. The lower the stock goes, the more shares they have to sell to raise the same amount of cash, which pushes the stock down further.
It's a race against time. Can they build the runway fast enough before the plane crashes?
That is the fundamental question for this company right now.
To help them win that race, they've brought in some new personnel. Let's look at segment 6, governance. Who is steering the ship through this storm?
They've made some very smart, very targeted hires that show they understand exactly what they need to do. First is Jason Weed, the new Senior Vice President of Commercial Sales.
What's the pedigree here? What makes him the right guy?
He's a retired Navy captain. More than that, he was the former Commodore of the Navy's first uncrewed undersea vehicle squadron, Uviron-1.
Okay, you literally cannot get a better resume fit than that. He ran the actual unit that uses this type of technology.
He was the customer.
Yeah.
He speaks the language. He knows how to navigate the frozen middle of Pentagon bureaucracy. He knows what the Navy actually needs operationally, not just what engineers think they need.
He can translate between the two worlds and on the board. Anyone new there?
Carlos Montesi has been nominated. She's a former executive at L3 Harris.
L3 Harris is a massive, multi-billion-dollar defense prime.
Right. She brings the high-level governance, the compliance knowledge, and the financial discipline required to be a serious government contractor. She knows how the game is played at the highest levels.
And there's one more asset they have that isn't a person, the security clearance.
Yes, this is a huge moat. OPT has secured a secret-level facility security clearance from the Department of Defense.
Why is that such a big competitive advantage?
Because if you are a cool Silicon Valley startup with a neat robot boat, but you don't have a facility clearance, you cannot bid on classified Navy work. You can't even read the request for proposal, the RFP. It takes years and millions of dollars to get that clearance. OPT has the ticket to the dance. Most startups don't.
We should also briefly mention the international footprint. It's not just the U.S. Navy they're selling to.
No, and that's an important part of the story. They are seeing real growth in the Middle East, specifically the UAE, and also in Latin America. Mexico and Chile are two examples.
And what is the mission profile there? Is it defense as well?
It's more industrial, things like oil pipeline monitoring and bathymetric surveys for the mining industry, using the WAMD to map the bottom of a tailings pond or inspect a pipeline for leaks.
It's less James Bond and more industrial maintenance.
Exactly. But the margins are good, and crucially, commercial customers tend to pay their bills faster than the Pentagon. It's important diversification.
Okay, let's bring this all together. Let's get to a verdict. We've seen the pivot, the impressive tech, the high-profile partners, and, frankly, terrifying financials. What are the two scenarios here?
Scenario A is the bull case. I'd call it the transparent ocean scenario. OPT becomes the essential infrastructure backbone for the Navy's new autonomous fleet. Project Overmatch succeeds, the Replicator initiative buys hundreds of WAM-Bs, and that backlog converts to real, recurring revenue. The as-a-service model starts printing cash, and they grow into a multi-billion-dollar defense prime.
That's the dream. That's the 10x return for investors who get in now.
That's the dream. Scenario B is the bear case, the liquidity trap. Government contracting remains too slow. The backlog is real, but the checks don't arrive in time to cover the burn rate.
And so?
They have to dilute the stock into oblivion, issuing hundreds of millions of new shares just to keep the lights on. The technology survives, perhaps it gets bought out of bankruptcy by a bigger company like Andoril or L3 Harris for pennies on the dollar, but the current shareholders get completely wiped out.
Risk defined, portfolio protected, or in this case, portfolio evaporated.
It really all comes down to one thing. They have the tech, they have the contracts, but do they have the runway?
So as we close out, let's synthesize this. We've watched OPT make this incredible journey from a wave energy dreamer to a hardened defense contractor.
And it's clear the Department of War strategy is the only path forward for them. The green energy dream was noble, but it didn't pay the bills. National security does.
And here is a final provocative thought for our listeners to chew on as we finish up.
If the U.S. Navy is truly moving toward a distributed fleet, A future where autonomous robots outnumber human sailors? Then OPT's buoys are no longer just power sources.
What are they?
They're the gas stations and the cell towers of the future battlefield.
The gas stations and the cell towers. That puts it in a very clear perspective.
Exactly. If you don't have them, your expensive drone fleet dies. Your network goes down. The question isn't if the technology is needed. It absolutely is. The question is whether a small company like OPT can survive the procurement bureaucracy long enough to build it at scale.
That is the question. For all you learners out there, keep your eye on that cash versus burn ratio in the next quarterly report. That is the only number that really matters right now.
That's the whole story.
Thanks for diving in with us.
Always a pleasure.
We'll see you on the next deep dive.